Alright, just a small update on what happened today. Okay, so for daily, it closed yesterday, closed this way, slightly below the weekly balance price range. Right, it created this fair value gap right here. So I was thinking that maybe today we might want to shoot inside this area, like maybe it wants to attack this area to offer buy side an opportunity for a trade, because this down close candle, this down close candle created this CB right here. So breaking down into the 5 minutes chart on Friday itself, right, during the London session, it took out the liquidity and took out the sell side liquidity and started to spool up slightly higher before after the consolidation right here. Okay, so usually for London, they create the high of the days and the low of the days if the day is gonna be trending towards that direction. And as I've mentioned many times before, the sell side, any liquidity that is being attacked during the London kill zone, it's usually a Judas swing. So right here we have 1, 2, 3. It created 3 lows after attacking this sell side here. Okay, 3 lows, and then after that it kind of somewhat reverses. So prior to 8:30, we had this move down into this area right here. This is a 15 minutes fair value gap. It's nested within this 15 minutes fair value gap. Okay, and as you can see, the price came into this level here, found support by the weekly balance price range level, and shot up to take out this liquidity here, leaving relative equal highs here, here, and here. Okay, 3 highs. At 9:30, the market dropped, taking out this sell sides right here. Okay, it did not take out this sell side, left this open, but it took out all the sell sides that was created before. Okay, after the London kill zone. Okay, so what somehow this drop right here, what does it do to the retails? Right, it induces, or it lures them to short the market due to this 5 minutes candle down. Okay, it's a strong candle, right? It's a very, like, hey, take a look, I'm here, that kind of candle that you cannot miss. So when the retail see this, they're gonna short because they think that, oh, it's gonna go down even lower. So what I did was, because I know that there is a news driver at 10, I went down to the 1 minute time frame, and I saw that the price is pulling up higher and higher, taking out this and this swing highs. Okay, over here, when it took out this swing high here, it created this volume imbalance, which was repriced into, offered to the buyers, or offered to the sellers. So this is a form of fair value gap as well. So when it pushes higher, this is the confirmation, right? The second swing high that it taken, right? I like this setup better because it gives me a swing low that is not too far from the entry point, and it traded above the previous bullish fair value gap. Okay, so right now this fair value gap has become a balanced price range. I like that it started to close above it, and the price was finding support over here as well, right? So I took a trade within this fair value gap, stops over here, and I was targeting this high here and the high at the red line down here, this high here, right? Because these 3 highs are relative equal highs. So at 950 to 1010, as I've mentioned before, there's an algorithm, there's a macro. So it took out the liquidity here, traded into this this bearish fair value gap. So after which it came down back into this level here, this fair value gap. Okay, it offered quite a lot of opportunities for smart money to enter longs right here. So they are all accumulating right here. All right, when this, how do I say, when this swing high was taken, I moved my stop loss to this level, to this swing low down here, because from my understanding, I would not like this swing low to be taken if it was to run higher, right? Because right here at close to 10, we had this 3 drives higher, and at the same time it created SMT divergence on other indices. So other indices were making higher highs while S&P is making a lower high. So I was cautious about it. So I put my stop loss below here, right? Because over here, this is the last order block before swing highs were taken out. Okay, so I expect to see sponsorship in this area, and if the price was to break down, then it kind of invalidate this move up for my logic. Okay, likewise at 10 o'clock there was a news, so the news driver smashed the price down to take out this liquidity down here. Okay, when it took out this liquidity, it took out those traders who have long and then trailed their stop loss over here, seeing that it's formed another high, right? I did not move my stop loss here because I understand very well that there could be an institutional order flow entry drill kind of how do I say, is it an algorithm or is it like a macro? I'm not too sure, but that's how they enter right here as well. So as you can see, it tapped and then it just left, right? Spend no time in this zone after this sell side was taken. So this is why I did not trail my stop loss here. I allowed that risk to be here. Okay, so when it came down right at 10, what happened after which? The price took out the relative equal highs that I was looking for. So this was the overall fractal I'm trading in. And how many points was that? It's very simple, right? Just take this, put it to this level here. It's 10 points. It's more than enough. If you're trading the normal E-mini, yes, not the micros, the normal one, you could have netted $500 from this trade alone, which took around let me draw the line here. I entered at this candle here, so from this to this candle here took around 20 minutes. So it's a good timing. Like, you're not in the market for too long, and once the macro ends, I got out of the position, right? Look at what time it's approaching, 10:10. So at 10:10, when the macro sort of ended, I expect some form of retracements as what we got over here. And looking forward, right, 10:30 will be the real move that's gonna unfold. 10:30, right? So you get some sort of retracements down here, but if you zoom out on the 5-minute chart, that's where the 5 minutes traders will enter their long positions to take out the final target for today would be the daily fair value gap created by yesterday's candle, which means it's also yesterday's high. That was my overall target, but I did not wait or trade to that target. Okay, I'm still training myself to just trade within the macro meaning the time where the algorithm is working. Okay, because that gives me the highest probability of where the market is gonna go. This type of trade, yes, I would like to master it, but it takes time, right? It takes time to hold the trade to these levels, because we left this equal lows down here, which is sort of like a suspect. I'm not sure whether the price will not want to reverse at 10:30. That's the reason why I closed my trades. Okay, I closed all my positions by the time it hit this target right here. Okay, this was the potential buy side that it would have aimed for, but ultimately, yes, it's the daily fair value gap that is just slightly above this relative equal highs here. So you have a lot of confluence for the price to reach into this daily fair value gap, this level right here, 394875. Okay, so on the 5 minutes, as you can see, sell side purged, and then market structure shifted higher, creating this fair value gap right here. Okay, this fair value gap is supported by this huge order block, bullish order block, and we do have the breaker as well right here. So this is a very good level to long, to accumulate your longs if you are looking to get the entire range of the daily trading range, okay, which would be the daily fair value gap level, right, from here to here. So at 10:30, let's see what happened. Right, 10:30 right here. 10:30, we saw a reversal down back into these levels right here, and from this level, it traded through the daily fair value gap. Okay, so if you were to play on the 5 minutes 5 minutes chart, you should be entering around this area here. Okay, swing low, last swing low to swing high, 50%, right? So we should enter around this level, 39.29.50. Right, so let's go to that level, 39.29.50. 50%. Your target will be the daily fair value gap right here. So if you use this measurement, 19 points, not too bad for daily intraday, for intraday trade. Okay, 19 points, that's almost 2 times of the points that I've took from the markets. Okay, so that will net you around, if you're just using one contract for the E-mini S&P, that will net you around about 1000 USD in the span of, how long did it took? Alright, let's enter this candle here, 1 hour and 5 minutes. Okay, this one here, 1 hour 55 minutes, right? In the span of an hour, you could have netted 1000 USD. So this is the kind of trades that I'm looking to build on, but right now I'm just going to focus on the macro first, and I'll see if I can be consistent in that fractal, and if I can, then I would like to build on it and then sort of get to this level right here, whereby I hold my trades to my daily narrative, the daily draw. Okay, so that's for today. we'll see if they want to continue to spool higher or reverse down, because we do have this relative equal lows down here, right? Usually the reversal might take place on the PM session on Friday, right? It's either the PM session or the lunch hour, but right now lunch hour doesn't seem too bearish. Okay, so I'm gonna bet that it's gonna be a PM session if it was to reverse, but do keep in mind that we already took out lots of sell side, right, without taking the buy side. Okay, and there are lots of inefficiencies above as well, which price may tend to gravitate to. So the lower risk would be on the long. Okay, if you were to play shorts, it's sort of a higher risk, right? Higher risk which means lower probability, lower risk, higher probability. Okay, I would just change my words. So higher probability if you're on the long. Okay, so over here we have the daily balanced price range as well, and as you can see, the price is finding some sensitivity in this area, because once the price leaves this area here, this is going to act as resistance, and once it trades up and above, this is going to be support. This is the real support resistance. Okay, and yeah, I think this is about it. Today quite a good trading day for me. So as you can see, yep, we're on a 50 minutes, so I might as well just show you what I'm looking at. So over here, prior to 8:30, I was looking for the price to reach into this level. Okay, this is the nested 5 minutes fair value gap, nested within this huge 15 minutes fair value gap after taking out the sell sides and shifting above this highs here. Okay, and yeah, so far so good. I'm starting to get the hang of it, and once I do, then I'll proceed on to do some funded challenges to get myself funded, because when I get myself funded, I can trade on E-mini instead of the micro. Okay, you don't need a lot of moves for the E-mini to be profitable in the short term, because as you can see, just by using one contract for the E-mini, you are able to net minimum 500 within 20 minutes like for the single day, and then you can just close for the day if that's what you're looking for. Okay, so yeah, I'll talk to you again maybe when the market close. I'm looking at the weekends, but we do have Chinese New Year, so let's just see how things go. I may have time, I may not have time. Okay, it all depends. Family first during this holiday, and I'll get back probably next week, Tuesday or Wednesday. Yeah, when the market starts to move again. So yeah, happy trading. Or should I say, I hope this helps to give you some insights on how the markets are ran, right? Basically, I'm just talking to myself to tell myself that, to keep on convincing myself that this is happening, right? Because the thing is that to be able to trust this model, you need to convince yourself that this model is working, right? Before you can take it and then just leave it to run and see if you're right or wrong, and not just be doubtful or skeptical about it. Okay, that's what I'm trying to achieve. This is why I'm doing this videos so that I can, when things are not going well, or whenever I doubt myself or the model itself, I'll just come back to those videos and I'll watch them, and I'll be able to use it as a form of revision, if you would like to put it that way. Yep. So anyways, right now, just a quick highlight. Lower highs, Nasdaq higher highs. Okay, on the 5 minutes. Right, Dow Jones lower highs, Nasdaq higher highs. Okay, so once this happen, you expect some form of retracements. I'm looking at this fair value gap right here, and if this thing wants to just reverses, looking at this sell side here during the lunch hour, and maybe we get some move during the macro at 13.15. Yeah, and that's it for today.